It's hovering right near that 200-day moving average. And, gold has hung in there really well. I mean, I think there's plenty of upside in gold, but silver is a much more compelling value proposition right now.
And we're seeing silver, it seems, depending on where you're looking, it's trading under $20. One of the viewers here is asking, is this the back up the truck moment for many stackers? What's your take?
Well, I think we're so close. This could be it. I'm not in the business of calling bottoms, but I deal in probabilities, not predictions. I think this could be it. It wouldn't be surprising at all if this is the low. However, we've still got that big support between 18 and 1850. I don't think we'll get down there, but I think the mining stocks are anticipating a low being, because it's nice to see mining stocks are green today with silver just getting smoked. Silver's down almost 3% today. So mining stocks may be anticipating this. And I think the market knows that there's a lot of people waiting to back up the truck between 18 and 1850. So often when, there's that, those buyers waiting, you don't get down to that low. So this could be it.
Definitely. I mean, it seems like people are looking right now. People are calling to back up the truck in some sense. I mean, they're definitely taking advantage of this opportunity as we see the prices low. Your take again on, the mining stocks, as you mentioned, it seems like they are kind of anticipating higher prices because it's such strange market action we're seeing when they are rallying. If we look at GDX or SIL, we're seeing those rallying today, even though the metals are tanking.
Yeah, the mining stocks tend to be a little bit more forward looking. So I think the mining stocks were pricing in even lower silver prices than 18. So, now I think they're going to start to lead on the upside. The mining stocks had just gotten so cheap relative to the actual metal that, I'll be honest with you, yesterday was kind of my little back up the truck moment where I deployed almost all of my remaining cash in the mining stocks. And then in my trading account, I'm initiating some long dated call options on silver today. So could we go lower? Yes, but I think we're pretty close.
And if we could get into the charts and the technical analysis, if you could share a chart of silver with us and what you're seeing.
Sure. Yeah. Let me go ahead and
one moment here. I'll just allow you to share the chart there. Sorry about that.
Yeah, no problem at all.
Good to go now.
So nothing cosmic on this chart. I think anyone who looks at charts and technical analysis is probably drawing pretty close to the same exact levels here. 1975. That's where we're hovering right above right now. Price is sitting right at 1975. That was the swing high back in September of 2019. There was also a gap on this chart. If you look at the daily chart here, this is a weekly candlestick, so this gap has been filled. And this morning we went down to a low of 1930. And you can see this really strong support right here between 1850 and 1890. Like I said, I don't think we're going to pull back there, but we could. And if we did, that to me would be the back up the truck moment for me personally. When you go to the daily chart for silver too, there's something called positive divergence. And, sometimes when I say this stuff, I think some people might think this is like technical, mumbo jumbo, and it doesn't really matter. But it does matter because the banks and the institutions and the trading algorithms look at these kind of things, and that's who drives the paper price of these markets on the COMEX. And positive divergence happens when price makes a lower low, like you can see right here, but things like RSI make a higher low. So you can see a higher low being formed right here on the RSI. So that's positive divergence. We also have the commitment of traders report that I'll pull up right here, and the COT is structured in such a way that is consistent with major lows. That doesn't mean you can't go a little bit lower, but the bankers have been covering their short positions and they're now positioned for a major rally. And they tend to be the smart money, unfortunately. And retail investors tend to be, the average retail investor tends to sell at the exact wrong time. And, the COT report is suggesting we're getting very close. All the evidence is starting to stack up that we're close to a major bottom. Downside risk, I would say, is, $1 or $2, where the upside potential, is $40, $50 silver. So the risk reward is heavily skewed to the upside here.
No, it does seem, even I know we talked with David Kranzler about this, that, we are seeing the banks are net long silver. Can you expand on the significance of this?
Yeah. So I guess there's different ways to look at it. I mean, the chart I just showed, their commercial net position is not quite net long yet, but I guess there's different ways you can break down the internals of the commitment of traders report. But regardless of how you look at it, the banks are positioned. This is exactly how the COT report tends to look right near major bottoms, and we're right there.
Now, you mentioned that we could go as low as 1850 or something like that, but what makes you believe that there is major support? What kind of signs do you see that there is major support there and we couldn't go lower?
Well, just on the charts, I mean, it's very clear. Let me pull that up again. I don't spend as much time on Twitter as I used to, but last night I was on Twitter for a little bit and I saw almost everyone drawing the same chart, which kind of, everyone's looking at the same levels. So you can see right here between 18 and 1850, this was major resistance from 2019 all the way into 2020. So what was resistance becomes support. So that 1850 to 1890 level is very significant.
All right. And as we move to gold, what are some of the aspects what are some of the things you're looking at there?
Well, first of all, if I were looking to buy right now, I mean, a lot of people, I think, conflate volatility with risk. So from my perspective, silver is actually a lower risk investment right now, even though it's more volatile. So if you can stomach the volatility, silver is just so much cheaper on a relative basis than gold. Gold has hung in there really well. It's clung to its March of 2020 uptrend line. So it's still in an uptrend. It never lost its uptrend status. It's hovering right near that 200-day moving average. And, gold has hung in there really well. I mean, I think there's plenty of upside in gold, but silver is a much more compelling value proposition right now.
Definitely. And could we look also at the silver mining stocks? Because I think it is important to note that they are rallying right now. And you are mentioning how this is really the mining stocks may be anticipating that this is a bottom.
Yeah, for sure. And why don't I show you too a chart of junior silver mining stocks relative to gold miners, because you'll see the value there. The real value is in the junior silver mining stocks. Now, those are, a bit more risky. So for those who can handle that who have the risk tolerance, that's where the real value is right now, is in the junior silver miners. I'll pull up a chart right here. And I've been watching this chart for a while. These longer term charts, often take, a few months to play out. And I think I've showed this to your listeners before, but this shows SILJ versus GDX. And what we see here, first of all, is just how undervalued junior silver miners are relative to their gold mining counterparts. But you also see this bullish pattern. This is a bullish falling wedge. And what happens is, as you approach the apex, which you can see we're right there at the apex, once you break out to the upside, you tend to get a really sharp move. So I'm looking for junior silver miners to play rapid catch up to not only gold and the underlying metal, but also, relative to senior gold miners.
Definitely. And when it gets to the silver miners themselves, I know we are seeing a rally both in gold and silver miners. If you can expand on that and kind of what we're seeing on the charts for the silver miners right now.
Sure. I like to use SILJ as a proxy for junior silver miners. Now, SILJ is really more mid-tier silver miners. It's not necessarily explorers and developers, but, it's a good proxy just for, what the junior silver miners are doing. And there's really not much to say as far as patterns here. We're oversold. We made a positively divergent lower low. So you can see right here, RSI made a low here. Now we made a higher low on RSI, but a lower low in price. That's positive divergence again. That shows downside momentum is really slowing here. And we're at an area of pretty strong support right around $10 on SILJ. So, just like in silver, the signs are stacking up that we're very close to a bottom here. I was buying pretty aggressively yesterday. And, if I hadn't been, I would be in there buying today. And that's for people with a, 1+ year time horizon who can stomach the volatility.